What's up everyone, it's Karthik with MoneyVest. Welcome on board for our Market Open live stream today. A little bit of a longer session because as we already know, we've got the big jobs report coming out later today. In under 1 hour, we're going to get the unemployment numbers in the United States with average hourly earnings, unemployed persons, unemployment rate, everything, how many jobs we added in the month of August. All of that is going to be released by the Bureau of Labor Statistics, so BLS, at 8:30 a.m. Eastern. So let's get started here. Pre-market, definitely got to brace ourselves because we are seeing a not so great start for the markets with the Nasdaq 100 already down close to 1% right now. And we got the S&P 500 down about 0.5% with Nvidia down about 1.2%. So my put does expire today with a 108 strike. I have a poll going on in our Discord at the moment whether people believe that Nvidia is going to be closing above or below $108. And Tesla, which has been on a 2-day very strong run-up, is slightly down about 70 basis points right now. So hope you all are ready. In about 40 minutes, we're going to get those numbers at 8:30 a.m. Eastern. So I figured I'd go live a little bit earlier to discuss the expectations from the BLS report and what the market's reaction may look like, because it's really going to come down to striking a very good balance between a jobs report, which is showing strength, but it's also not too hot, but it's also not showing weakness. And even if it is, it's not showing too much weakness. So it's kind of going to be a very sweet spot, in my opinion, where the jobs report really needs to be in order for the markets to feel a bit more optimistic. Because in either direction, in either extreme direction, I think there can be more pain because the markets can extrapolate pretty bad conclusions from that report. So we'll discuss all of that. Again, if my audio and video is good, just give me a thumbs up as we allow more and more people to join in. Overall, good morning, Caddy. Love spending time with this community on exciting days like today. Thank you for creating this community. So I really appreciate that. Overall, and yes, this is our community of thousands of traders, investors globally that can come together, discuss some of the macro events like inflation, interest rates, FOMC, unemployment, and take a look at the market's reaction together. And we'll see what happens with my Nvidia put and whether it closes above or below $108. So it's going to be quite exciting for us to see what happens after the report is out and for the rest of the day, and whether I decide to roll out my contract or let shares get assigned to me, and then of course start selling calls, because call premiums are slightly better than put premiums right now, because if I were to roll out my contract to next Friday with a little bit of a lower strike, yes, I'm gonna potentially receive a small net credit, but that's still gonna put me at a bit of a risk of getting once again in the money next week. So I'm already in the money right now for Nvidia, which right now is trading at just under $106. My put strike is at 108. So we'll see whether I want to get my shares assigned to me or I want to roll out that contract, or if Nvidia moves back above out of the money. But I think the likelihood is a little bit low. That's only possible if the jobs report creates a little bit of that positive, optimistic environment for the market, which again, we'll find out in about 40 minutes or so. So good morning, everyone. Thank you so much for joining us. And Palantir inclusion today on the S&P 500. Yes, so again, I don't think that news is confirmed yet. There's a lot of speculation that with S&P 500's rebalancing, there's a possibility that Palantir gets included after consecutive quarters of profitability, approaching a certain market cap, and again, being a very strong component of the United States in terms of its overall business operations. So yes, there is definitely a lot of expectations for Palantir to move into the S&P 500. And I think sooner or later, eventually it is going to replace one of those companies, but we just don't know whether that's going to happen either today or, in the future. But yes, there is definitely some expectations for that to take place. Is bad news still good news or bad? That is the question. So let's go over to the expectations for employment. So we'll come over here. We'll come over to the jobs report expectations here. So these are the consensus from the market, about 160,000 jobs added in the month of August. That's where the markets are expecting the numbers to be. And the most important number is going to be the unemployed persons. It's not so much about the unemployment rate. I think it's going to more to do with the unemployed persons, because that's really the number that we look at to calculate the unemployment rate. And then also that tells us a little bit of that ratio, which is job openings to unemployed persons ratio, which, as we discussed in our previous update, it's now come down to 1.07. So this is where we are for that ratio. Lowest level in over 2 years. This number was at well over 2.5 million, because at one point the JOLTS number was, I think, well over 12.5 million. And then we also did have the unemployed persons lower, closer to 5 million. And this right here was the picture at one point in 2022, I think in 2021 also, where we had a very, very tight labor market with significantly more job openings than compared to unemployed persons. So well over 2.5 jobs openings for every one person that was unemployed. And that picture has obviously come down to now a little bit more of an equilibrium with higher interest rates as companies are not hiring as much. There's fewer job openings and there's more unemployed persons. We're seeing that ratio come down to 1.07. So it's, again, normalized a little bit closer to 1. But the lower this number gets down to, the worse the situation becomes from an unemployment standpoint, because then, we're going to get into a situation if this number accelerates above 7.7. So let's say, for example, this goes up to 7.9. Now this number is below 1. That means there's more people unemployed than there are job openings in the US, and that's exactly what the Federal Reserve is trying to avoid, because that's going to really accelerate that unemployment rate higher. Because take a look at what happens to the unemployment rate. It goes from 4.2 to 4.7% the moment the unemployed persons spike to over 7.9. If this number gets up to, let's say, 8 million, now we're looking at 4.8% for the unemployment rate. And that's exactly what the Federal Reserve is trying to avoid. What they're really hoping for, what they're really praying for right now is that by the time unemployment starts moving up, inflation is already back down to their target, at best even lower than their target, so they can then start cutting interest rates a little bit more aggressively. The last thing they want is unemployment to accelerate upwards without inflation being down to that 2% target, because then they'll be fighting against their dual mandate. They will have a very difficult decision to make, whether to cut interest rates, increase interest rates, or what exactly do they need to do. So coming back over to the markets here, and really just the expectations for the consensus. By the way, we do have a poll going on right now. We got about 159 votes. We're trying to get to about 1,000 votes in the next 30 minutes until these numbers come out, if you've got more people joining in. So definitely do participate, and what your expectations are for unemployment rate at 8:30 a.m. Eastern. Are you expecting for the rate to be above 4.3%, at 4.3%, at 4.2%? That's where the consensus is, or below 4.2%. So let us know what your expectations are. Right now, 48%, so almost half of you expect unemployment to be above 4.3%. That's going to be actually not only higher than the consensus, but also more than the prior number of 4.3. 136,000 for the private payrolls, and about 2,000 decline in manufacturing payrolls, and the participation rate is going to be 62.7% as the consensus, 0.3% month over month in average hourly earnings increase, and year over year sitting at 3.7%. So that's where we are pegged right now. And like I said, the more important number is going to be the civilian unemployment, not so much the rate, but really just the number of people, right? Number of people that are actually unemployed. And that's really what's been accelerating upwards from about 5.9. As I mentioned, in the 2022 time period, we were closer to 5 million, 5.5 million, versus JOLTS, which was well over 12 million job openings. And now it's been accelerating slowly and steadily, now sitting at 7.163 million. So this is the number that I'll be focusing on. And then, of course, we'll take a look at what sectors really created most jobs, because as we know that the government sector is creating more jobs than the private sector. So if you take a look at employment by industry, and you come over here, actually let's just go over to industry monthly averages, monthly breakdown. So total non-farm payrolls, and we've got government 17,000. So if you come over to the last 12 months, we've had government jobs at 546,000 new additions, and then service providing jobs at over 2.2 million. And total non-farm 2.5 million, and 1.9 million coming from the private sector as well. In the last 1 month, though, we've got total private at 97,000, government at 17,000, and service providing 89,000, and total non-farm payrolls 114,000. 3 months is about just over 500,000 jobs added in the last 3 months here. So markets, pre-market, not looking super pretty. We are down almost 1%, but we'll take a look at the unemployment numbers very soon, and we'll see if there's any changes to the market's reaction here. Volatility is higher, up over 9.7%. So back up to almost 22, and it's kind of normal for the VIX to be a little bit more elevated in the month of September because of the September seasonality, and something that we have also discussed in our previous updates. I've kind of showed you guys this chart a couple times already, which, okay, I don't have that here, but that's the seasonality chart that I have talked about in our previous updates as well. And this right here is the first trading day of the month of any month, basically, when the S&P 500 was down a little bit over 2%. What's the probability for the rest of the month to be higher or lower, and by what amount? And if the first trading day of the month is down 2% or more, on average and on median basis, the markets are up 3.4% rest of the month, and they're up 72% of the times. However, if September ends up being one of those months, everything in boxes is September, when the markets are down 2%, then the probability drops down from 72% down to as much as 50%. So it's basically a coin flip where the rest of September is going to be positive or negative. And if it is negative, the average loss ends up being a little bit over 8% as opposed to an average gain of about 3%. So there's a huge discrepancy there that not only September, rest of September, a bit of a coin flip with regards to how we trade. The losses are going to be more severe compared to the potential gain if there is any positive environment for the markets to move higher. So that's where we are. Again, thank you so much for joining, everyone. We got almost 350 people watching, over 200 votes. Make sure that you drop a like and do me a favor and share this live stream in other groups, other communities, if you want people to join and have a more lively discussion, have more people engaged. So we can take a look at the numbers here together in about 30 minutes now. So it's now well past 8 a.m. Eastern. So we'll take a look at that at 8:30. And do me a favor, subscribe to the channel and share this live stream in your WhatsApp, Telegram, Facebook, whatever it is, and we'll have more people join for the numbers and the market's reaction. We'll take a look at that live together. Happy Friday. Good morning. Good morning. Let the VIX fly. Good morning, everyone. So my Nvidia strike is at $100 expiring today. I'm good with whatever happens, so that is incredible. It's most likely going to expire out of the money. I'm assuming that's a put that you sold. Hi, I'm a new investor. I'm not interested in trading, only long hold strategies. Do you also have global stocks, or only USA is your software for this? So right now in our MoneyVest platform, we currently only support stocks listed on US exchanges, but eventually we're going to be including global equities as well. So stocks listed on European markets, Asian markets, Middle East markets, everything is going to be included. Right now there's over 17,000 stocks that are listed on US exchanges, but over time there's going to be over 150, 170,000 listed across multiple different exchanges, as well as a lot of ETFs to also be included. So that is going to come out in future updates. But right now, like I said, there's about 17,000 stocks that you can access across all US markets here, or US exchanges. Let me go over to the seasonality as well. So first spreadsheet was the Jackson Hole. I remember I had a spreadsheet that I was going over in our previous update. So it's this one. Let me just open that up, and it's boom right here. So this is the volatility, as I was mentioning earlier, that it's pretty normal for VIX to be a little bit higher in the month of September, with an average reading of almost 25 and a median reading of 20.5. So we're kind of right in the middle of that range, because, if you take the average of those two, we're 22.7, and right now we're 21.77. So we're kind of on par with where September usually is with regards to volatility. And the first trading day of September was very fitting, because we did see a 38% spike in volatility, getting up to over 21, 22 levels once again. So that's where we are. And as we already know, that over the last 13 years, the probability for the markets to go lower in the month of September is over 61.5%, with an average and a median loss of about 1.5 to as much as almost 2% for the markets as well. But the last 4 years have not been very well received for the month of September, with an average loss of over 5.7% and pretty much 100% probability that we've gone down over the last 4 years. So this year we are down so far in the month of September. So if you come over to S&P 500 on the monthly time frame, we are down a little bit over 2.5% already. So this has been a pretty normal occurrence for the markets, and NASDAQ here down a little bit more, I think, down over 3.3% already in the month of September, and NDX most likely down a little bit further, 3.29%. As of course, technology has seen significant underperformance relative to the S&P 500 and some of the other sectors out there. When are the jobs report going to be released? At 8:30 a.m. Eastern. So in about 27 minutes, we're going to get those jobs report numbers, and we're going to be tuning in live onto the BLS website. So this is the Bureau of Labor Statistics. You can pretty much take a look at these numbers yourself. National unemployment data. We come over here, and this is the next release employment situation for August, scheduled to be released at 8:30 a.m. Eastern time on September 6th, 2024, which is today. So in just about 26 minutes or so, we're going to get the jobs report, the unemployment numbers for the month of August. And the markets are going to be watching these numbers very, very carefully. Why? Because this is dependent on that. This is the interest rate expectations. Markets are kind of on the fence between a 25 and a 50 right now. So a little bit of that uncertainty still is present, whether the Federal Reserve is going to be a 25 or 50 basis point cut. 25, the rate cut is pretty much a done deal. I think a rate cut is going to happen. It's just a question of to what extent. And that's why I mentioned that I think it's really important for the jobs report to come in within that sweet spot. I think that sweet spot is going to be somewhere between 4.2 and 4.3%. If it drops down to 4.2, that's good. If it is at 4.3, I think that's still manageable. But if we get a jobs report that is really bad, let's say that it gets up to 4.5 or 4.6%, I think the market's expectations are going to quickly flip over to a 50 basis point. I think this number, you can expect it to be a little bit more of a majority. So from 41%, it could get, over 50%. Expectations for a 50 basis point cut. But that is actually not going to be it's not going to be good for recession expectations, right? So a higher level of unemployment is going to suggest a recession is already underway and unemployment rate accelerating upwards, which is not a good sign. We've already seen the uninversion of the yield curve after over 780 plus days. It's been the longest inversion of the yield curve between the 10 and the 2-year treasuries. So the spread was negative for the longest time, and it finally turned positive. And it's usually when that spread turns back to positive territory and that uninversion takes place is when the recession usually begins. So a higher unemployment rate, anything that's over 4.4 or more, is actually not going to be great news for the economy. It may be great news for the market with a higher probability for a 50 basis point cut. But in my opinion, the economy is going to be in a bit of a uncertain situation, whether recession's already begun. Now, on the other hand, if we actually get a unemployment rate which is below 4.2, like let's say that we come back down to 4.1 or 4%, we had a very strong jobs report, a lot of jobs added, and the unemployment rate trickles back down to closer to low 4s or maybe even sub 4, then that's also not going to be great news, because then the Federal Reserve may start backpedaling a 25 basis point rate cut in September. We could possibly get pushed out to November. And that's really that's not also what the markets want to see, because rate cuts pretty much is priced in. So any type of expectation that we may not see a rate cut would also be not very well received by the market. So it's really kind of hitting that sweet spot between 4.2, 4.3%. Anything on the other extremes, in my opinion, may not be very well received by the market. If you come in lower, that may be good for the economy because the jobs market's still pretty stable and strong, but may not be good news for the market. And on the other hand, it's not going to be great news for the economy. And I would argue it may not be good news for the market either. Although in the past, we've kind of talked about what may be bad news for the economy, may be good news for the market because of interest rates. But in my opinion, I think eventually earnings are going to get affected, which is going to be affecting the markets in some way. So if economy is not doing well, eventually that's going to be trickling over to the earnings, which then is going to affect the markets eventually. So that's where we are. And right now we've got 46% of people expecting unemployment to be above 4.3. So 4.4 or more is what almost half of you guys are expecting for those numbers, which in my view, I think may not be very well received by the market, because those recession expectations are only going to get worse with a higher level of unemployment. So that is something to keep in mind. But we'll see what happens in about 22 minutes here. And pre-market markets continue to roll over a little bit. Nvidia is rotating back up slightly, still down about 1%. At one point, I think it was down to $104, $105. It's now only down about 1%. Tesla is about flat, 37 basis points lower. SPY is down about 0.5%, and QQQs are down about 85 basis points. It is possible that we may see a pretty decent close to the week after having one of the worst starts for September. Again, we know that Tuesday, after the long Labor Day weekend, markets had a pretty brutal sell-off. You know, NASDAQ was down, I think, over 3%. S&P was down over 2%. And there was a lot of individual stocks. Nvidia, you know, the biggest sell-off for any company intraday, $280 billion, over 10%, almost 10%. So Tuesday was really bad for the market. So it's possible that we do see a little bit of a relief rally to close out decently strong, but that depends largely on what happens with unemployment that we're going to get shortly. Walt, new here, great explanation. So thank you so much, Walt, for joining. Really appreciate it. Make sure that you subscribe to the channel. This will be remembered as an opportunity. Joel says the FIX going to go up. You mean the VIX? The VIX. Should we short the VIX if the market goes up? Well, if the market goes up, I mean, you're expecting the volatility to come down because there's that inverse correlation. But even when the volatility does spike, the short vol trade almost never works because it's already priced into that trade. And even if the VIX starts coming down, your contract may not go up in value or may not appreciate. And that's something that, you know, a lot of people trip up on is your volatility was spiking to over 65. I shorted volatility. It was bound to come down, and it did come down, but my contract did not gain any value is because it's already part of that contract premium that you've paid. It's already baked into that contract. So I think it's really important to understand short volatility trades are very, very difficult to basically plan out because you're expecting a volatility crush fairly quickly. You're expecting it to happen almost instantaneously. If it happens over a period of time, the decay is going to really kill you with that contract. What is your take on YouTube celebrities starting their own crypto coin? Would you stay clear from investing in these types of cryptocurrencies? Thomas is asking. So, I mean, there's been a lot of projects, and I'm sure there's been a lot of crypto and altcoins. Honestly, like my understanding of crypto is kind of limited and contained to Bitcoin and Ethereum, which is one of the reasons I've never really ever dabbled into any altcoins whatsoever. I know there's been the big sort of run up of Dogecoin and the whole saga around Dogecoin, where Elon Musk was kind of endorsing it a little bit, and there was a lot of people investing in Dogecoin, and then there was a lot of different types of crypto projects that eventually ended up going bust. So it's really a wild west because there's no regulation, there is nothing that's kind of vetting these projects, or there's no value addition. So I would really recommend everyone to be careful if you are investing in crypto or altcoins or any of these projects. Really, there's no shortcut to success. Like, that's the bottom line. There's no shortcut to making money in the markets. There's no shortcut to generating a lot of wealth or, essentially, getting your portfolio up to multiple figures and achieving success in the markets, right? Patience is the name of the game. So if anybody out there is promising any type of returns or any type of projects that can make you a lot of money, just be a little bit more skeptical because there are no shortcuts, right? You have to go the long route. You have to be patient. And, Warren Buffett always comes to mind is that the markets are just a tool of transitioning money from the impatient to the patient. And if you understand that, you will know that there's always risks associated with whatever it is that you do. If there's high rate of return, there's high reward, there's always going to be high risk associated with that. And I think people tend to sort of forget, or they don't realize that there is also risks involved with what they're doing. So I would stay clear of some of the unknown projects, but we do have, a pretty good discussions around crypto in our community as well. There's a lot of people that are trading cryptos. I personally stay away from some of the unknown projects, but yes, Bitcoin, Ether, some of the more known coins are okay, I guess. But still, I mean, I wouldn't be overexposed in crypto because it can be incredibly volatile, and there has to be a whole strategy in place for that. How much lower do you see the S&P 500 QQQs getting to? I see some gaps down there and some strong support from Frank. So let's just do a quick technical breakdown on both the S&P 500 and the NASDAQ prior to these numbers coming out. We already know that Tom Lee's kind of called for a 7 to 10% correction It's not very often that you see, Tom Lee expecting a pullback in the markets. This right here was the warning. I did a video on this a couple days ago. I watched this interview live, and he essentially said that there is a possibility for some market turbulence for the next 8 weeks, and investors need to just be ready to buy the dip. If there is any type of selling pressure, that's going to be an opportunity for us to dollar cost average into it or buy some of the more higher quality names for the long term. So Tom Lee advises caution. Stocks could fall 7% or more. So if you come over to S&P 500 here, and I kind of do agree with Tom Lee because we've been kind of cautioning investors for a very long time because we had the MoneyVest index back over 4, right? So this right here is the MoneyVest index. If you take a look where we were just a few days ago, I did a video, right? So we were back over 4.05. And since then, we have dropped a little bit over, 10, almost 11%. We're back down to 3.61. That's the update that I gave you guys yesterday. So this has been a nice little pullback. And then when you combine that with the percentage of stocks trading above or below their moving averages, I also pointed out to this chart, which is percentage of stocks trading above their 20 simple moving average. And, at one point we were at well over 90%. So we had both the MoneyVest index, volatility extremely low, and this particular technical indicator suggesting for things kind of heating up a lot. So a nice little dip pullback was normal. And then you tag on the September seasonality. I mean, you just got a recipe to be careful, right? Be cautious there. So in my opinion, I think S&P 500, after a lot of consolidation here, broke down from this support. And I could see the S&P easily getting down to 5,400. That's a level that, I would be watching for the S&P as a potential support because even during this downtrend, we kind of validated here before gapping up once again. And this was also a support from back in June earlier this year. And that would put us down, I think, back in a correction or a little bit of a dip or slightly close to a pullback on the S&P, down almost 5% from all-time highs. In case we get a breakdown, below 5,400, if the bulls fail to hold up as that support, then I think the 5,200 is a possibility, which I also think is what Tom Lee mentioned. I think that's what he also talked about. Let me just see if I can bring up that post because I posted this on our Discord. Let me see if I can pull it up. 1 second. Tom Lee. I think it's on the market updates because he did mention something related to the markets coming down to 5,300 first. There it is. First, and then rallying back up to 5,800. So this right here was what he said. So market call for September, Fundstrat's Tom Lee. We see flat to down September, and then all the way through election day, and then market rally with S&P 500 rising to 5,800. So they've got a target of 5,800 post-election. But prior to election, so as they are seeing September, October to be a little bit more flat to slightly down, they mentioned that there is a risk of a move down to 52 to 5,300 first, and then ripping to 5,800. So 5,200 is going to put us right there. That's exactly where we were, in and around those areas during the carry trade blow up from back on Monday, August 5th. And that put us down almost 10% from all-time highs. This is a nice little correction for the markets as well. So that's going to be that support level. A couple of support levels to watch. 5,400 down to 5,200. Those are going to be those two levels to keep in mind. And bulls got their next test at 5,400. Coming over to QQQs, almost an identical story. We've got a 454 support. That's the level to keep in mind, aligned with that previous support that we validated from back in July. And, going back further, got from back in May and June as well. So that's what we're going to be watching for QQQs. Starlight says, same dude who said 40% gain in Russell 2000 by the end of the year. Yeah, so the thing is that, if you are a perma bull, right? If you are always bullish, chances are you're going to be more right than wrong in the market. That's just the fact about the S&P 500. If I come on YouTube every day and I tell you, folks, it's time to buy. It's time to buy. It's time to buy, right? If I every day I come here and I tell you, buy stocks. Chances are 10 years later, you're going to praise me because I was right all along. Why? Because over the long term, markets tend to move higher, right? They tend to actually move up. And on a 15-year rolling period, I mean, the odds of you losing money are practically nothing, right? 0%. 100% chance that you're going to make money on any 15-year rolling period if you've got a long-term time horizon. And in fact, over a 200-year period, I forgot what the name of that spreadsheet is. I wish I had that open right now where I show you guys the overall returns. Maybe it is returns. Let me see. Let me just open this up very quickly. Okay, maybe it is this one. Yes, it is this one. So, after looking at observations of 200 years, we've had 143 years positive, right? Negative years were only 57. So, you can pretty much encompass every sort of investor or strategist that you know of in one of these two buckets. Michael Burry, Peter Schiff, right? People that are very bearish or almost always bearish on the market are banking on these 57 years, right? Every once in a while, when the markets blow up, right, we see significant panic, feels like the sky is, falling apart, everything is about to come to an end. That's when those people seem that they did a really good job in predicting the markets, or they were right along the way. And then you've got Tom Lee, other very, very bullish, almost perma-bullish investors that kind of fit in that 143. Who do you think is going to be more right over a span of many, many decades? Of course, it's people who are always optimistic and always bullish, because they've got a 72% win rate versus a 28% win rate for the ones that are negative all the time. So, but the idea is to really be a little bit more tactical, right? So understanding, okay, what's going to be better in terms of that outperformance, because yes, you can buy and hold the S&P 500, but that is also very much dependent on how earnings do, because just to be a perma bull all the time is also not going to work out at some point, right? Ask investors back in Japan in the 1980s if they were almost always bullish on the market. 40 years later, 50 years later, there's not been any returns for the market. So yes, while the US is doing really well right now, nobody knows the future. And as long as earnings are good, as long as productivity is good, I think there's a reason to be optimistic on the US for the long term. But the moment you start seeing that tapering off, if the earnings are not doing as well, I did a video on this, just about a couple of weeks ago, talking about the 2-3 reasons why I'm optimistic in the US and why I wouldn't be optimistic on the United States if those 2-3 things actually change. If there's complacency from the United States, from US companies, if there's no more innovation, if there's no more adaptation for the changing market trends, if there's earnings are not growing, if their productivity is not growing, I think those would be the reasons to not be bullish on the markets anymore for the long term, if that trend starts to shift. But right now, we're not there yet. I think we are still growing in terms of earnings and productivity, and everything else is moving in the right direction. You still have the top 5, top 7 companies that are in the US, largest publicly traded companies that are pretty much dominating the world. If you think about it, all the products and services that we use on a daily basis come from those top 5, 6, 7 companies. So that's, again, just the testament to how strong the markets are, how strong liquidity is, capital markets are over in the US. But is that going to go on forever? That's the question. Anyway, so about 10 minutes to go. Yes, about 10 minutes to go for the jobs report coming out. 9 more minutes left. And let's see. I'm just going to go over some of the comments here. We have a good community in crypto, MoneyVest Discord with discussions. Yes, so that is true. A lot of people really interested in that also. Caddy's right, though. The safest high-risk asset is crypto, is Bitcoin. Yep, so I agree that. Touching semis or picks and shovels, AI plays, no more juice to squeeze there. Yeah, I mean, you're going to see those cycles because, semis are also cyclical. I mean, they're going to go through their cycles where there's a big boom, there's a pullback, there's a boom again. So, yes, semis are a little bit more overextended. So, I would love to see more consolidation and more sideways on semis. Nvidia, stocks like Nvidia, if they start to trade sideways, I think that's going to be pretty good because that is going to create a lot of premiums and a lot of cash flow. Selling option strategy works really well if you are in a consolidation and a sideways sort of market. If you are in a bullish market, of course, selling covered calls can cap your gains to the upside, but then you also need to know how to roll options well. And then, of course, if the markets are coming down, then you could end up, bag holding individual stocks. But then I also do recommend selling puts on stocks you're comfortable holding for the long term anyway. So I think that's really important to always remember. Okay, 10 minutes to go. Yes. So if we still have time to buy XLU, XLP. So, depends. Depends on a lot of different factors. Like what is your objective? What is the goal here? XLU does have a pretty good dividend yield. a 2.85, almost 3% yield plus good potential capital appreciation. So it is a very defensive strategy if you are looking at utilities as a potential investment there. But then technology is a little bit more growth oriented, less dividends, less value, but more growth. So it's really, give and take over there. So Frank, you calling the top in the US? You see downfall coming soon. Very confused by that comment. No, I mean, I never said this is the top for the US or if there's a downfall coming. IBIT, yes, Bitcoin. I do have a small position. I will continue to dollar cost average into that ETF. And that's just my only play related to Bitcoin. So that's it. That nothing else. I don't own Bitcoin or Ethereum directly. IBIT is the only one. It's like a ETF from BlackRock, I think. And or iShares. I always confuse that. iShares is the Bitcoin Trust ETF. And I don't mind kind of owning just a little bit of that to get exposure into crypto. Okay, so we got 6 more minutes for the markets to open. We got QQQs down about 86 basis points. S&P 500 down about 0.5%. Nvidia is down 44 basis points. Tesla is down 44 basis points. Nvidia is down over 1.3%. We got 533 votes right now, folks. So 800 people watching, over 873 people watching. Make sure that you do participate in the poll. What is your expectation for unemployment? Are you expecting unemployment to be at 4.3, at 4.3, above 4.3, at 4.2, or below 4.2? I'm going to go over the consensus now. The markets are expecting for the jobs report, for the unemployment numbers, to be at 4.2%. That is what the markets are pricing in. 160,000 is going to be that jobs numbers, and private payrolls 136,000 with 2,000 decline in manufacturing payrolls, and 62.7% is going to be that participation rate for today. So that's where we are. Make sure that you do participate. We're almost up to 600 votes here. 5 more minutes. 5 more minutes, folks. Share this video with your friends, family, other traders, investors that can join us for this release. We'll take a look at the market's reaction here. And you know what I'm going to do? I'm going to include for extended hours, and extended hours over here also. And here we go. 5-minute chart. This is QQQs right over here. We got the SPY, S&P 500 right over here. This is all extended hours. And we got Nvidia right over here. We'll see what Nvidia does. It's back up to $106 right now. And we got Tesla at the bottom left. And we are ready. We're ready for those numbers. What I'll do is I will, so come over here. And we'll just release, whenever this is updated, we'll do a quick refresh. And take a look at the market's reaction. What are we thinking? 1 or 2? 1, market rips. 2, market drops. Let's see how many people are expecting for the markets to rip. 1, type in 1 in the chat if you expect the markets to rip. 2, if you expect the markets to drop post unemployment. 1 or 2. 1 or 2. 1 or 2. I'm Andy Keddy. I don't know how you find the time, mate, but thanks for the channel. Really appreciate that, Andy. Glad you enjoy the content. Okay, lots of 2s, lots of 2s, lots of 2s. Markets expected, you guys are expecting for the markets to drop here on unemployment. We'll find out. I think if unemployment comes in, I guess, way too high, meaning that it comes in, blows past 4.3, 4.4%, I think that's one of the only ways I could see the markets drop pretty aggressively, because that's really going to elevate some of those recession expectations. If it comes in below expectations at, let's say, 4.1, 4.2, normalizes at 4.2, I think a soft landing scenario could send the markets higher. I think that's what I am expecting. But again, kind of going into these binary events, you really don't want to be making predictions or worse trades going into these events. So it's going to be quite interesting to see the market's reaction here. Folks, we got over 1,000 people watching. Make sure that you drop a like and subscribe to the channel. We're almost up to 83,000 subscribers. And then also take a look at the links if you're interested in joining us and our community as well. So we're 12 people away. We're 12 people away from getting to 83,000 subscribers. 12 people. We got over 1,000 people watching right now. I'm sure we can get 12 people to subscribe and get us to that goal of 83,000. Okay, so we have a bit of a mix of both ones and twos. A lot of people saying 6 and 7 as well. But I think I saw more twos than ones from all of you guys. So definitely expectations are bearish from this unemployment print. We're also going to open up Econ Day. And we are ready. We're ready about 120 seconds, everyone. 120 seconds for unemployment numbers to come out. And on my other screen, I'm also going to open up Twitter just so we are absolutely up to date and live. A minute left. A minute left. Here we go. Here we go. In 2 minutes, we could get the game-changing number that everybody's been waiting for such a long time, because it's really going to put the rate cut. September rate cut is going to be a done deal after today's unemployment. Whether it's 25 or 50, we're going to have our answer. Let's do this. 30 more seconds left. So the first thing we're going to be focusing on is right there. Unemployment rate rises or declines to whatever that number is. And August and the payroll employment, whatever that number is, in about 10 seconds here. Here we go. Market starting to roll over just a little bit. So nothing yet, nothing yet. Oop, big pop in the markets coming in. $4.2 U.S. unemployment, 4.2 versus the consensus of 4.3. We came in below the prior number, but on par with the consensus. 4.2% is the number, everybody. 142,000 jobs added in the month of August. So 142,000 in the month of August. Unemployment rate down to 4.2%. Markets did rip a little bit. We are still red though. So QQQs right now on the 1 minute time frame, they are pushing higher back up to 457. Down about 70 basis points still, and the S&P 500 is down about 43 basis points. I'll let you be the judge whether these numbers are questionable or not, despite what we have seen from the big revisions, from significant amount of all-time highs for people having 2 full-time jobs, right? 466,000 people. But the markets are going to take them at face value, which is 142,000 jobs added in the month of September, and unemployment rate drops down to 4.2%. That is on par with the consensus right now. A little bit of a muted reaction. We did see a bit of a spike in volatility. Speaking of VIX, back down to low 21s here, and we're still up 5.7%. But this right here was the number. I think the big telltale here is the manufacturing payrolls. I think that is definitely not good. I think 24,000 job losses in manufacturing. As I mentioned before, manufacturing and construction are two sectors, two parts of the market, or the economy, I should say, that if we see job losses in that particular area, eventually productivity is going to come down, because those are the two areas of the market where we build stuff. Manufacturing, we build products, right? We create and manufacture items, and then same with construction. We are building. That's infrastructure, which affects a lot of different products in the entire supply chain for materials. So that 24,000 decline in manufacturing, I think, is quite telling there. But 4.3 coming down to 4.2. But as you know, that I'm most interested in civilian unemployment, and where is that number? And it's also come down from highs of 7.1 million down to 7.115. So not a big change for unemployed persons. I think that's more or less stable. So if you plug in 7.115 into our report, so There we go. I mean, it's really just a rounding error at this point because we are still, I mean, in my opinion, pretty unchanged at 4.3%. So that's where we are, but the market's still seeing that as a bit of a positive, that soft landing is possible. Soft landing possibility is there. Tesla ripping up to $231. And we got SPY negative 40 basis points. We'll take a look at the full report here in just a minute and see where the actual gains and the losses are coming from. So let's do that. And we'll come over to the industry data, employment by industry on the monthly changes, and boom, right here. So manufacturing, like I said, 24,000 job losses. Construction still saw 34,000 job increases. We had total private 118,000, total non-farm 142,000. Services, once again, kind of leading the way, 132,000. Quite a few job losses in retail, manufacturing, and information technology. I mean, IT makes a lot of sense. It's really difficult for technology professionals to find a job right now, down 7,000 for that particular sector. Retail, down 11,000. Manufacturing, I think, is a big one, 24,000 jobs lost there. And the government sector coming in with a 24,000 job addition for the month of September. So that's where we are. Unemployment, and then we'll see how the rate cuts change. I think 25 basis points is what the market's going to be pricing in now fully. I don't think this warrants of 50 basis points because this is nowhere near close to a panic situation. So 25 basis points, I think it's going to be pretty much a done deal by the end of today in about 12 days. 12 days is when the next FOMC meeting is. So September 18th is when the next FOMC meeting takes place. And also don't forget, we've got inflation numbers coming out next week. So that is also going to be equally important, if not more important for the markets. So we got September 11th. Next week is, well, actually not next week. I think the week after next week, right? Or maybe next week. Yes, next week. Yes, Wednesday. Wednesday next week is when inflation numbers come out. But overall, I think this was a report that was, I guess, okay and kind of hit that sweet spot. That's what we were looking for. At least the good thing is that we did not hit any of the extremes. We did not come in above 4.3 or below 4.2, 4.1, because both of those expectations would have actually been bad for the market. As I mentioned earlier, before the numbers came out, I talked about how above 4.3 is going to really elevate those recession fears, and below 4.1, 4% is going to potentially backpedal the Fed from a 25 basis point cut. So 4.2% is essentially confirming what the markets were expecting. That is 25 basis points from the Fed, rate cut pretty much finalized, and a soft landing scenario that is a possibility. But it's just weird. It is just strange how the economy can give us so many mixed signals. So I will let you decide, what to make of these report, what to make of these numbers. But there's a lot of unemployment, as we already know. There's a lot of companies laying people off, and so yield curve uninversion. We got consumer spending, savings rate depleting down, retail sales flatlining a little bit. So there's a lot of other indicators suggesting for, the economy is not doing super well. But on the surface, on the face value, you still have pretty good numbers. So, recession, all the people predicting a recession, it's like one of those memes where you start predicting a recession, and then, sooner or later, eventually what happens is you've got a skeleton, like you're pretty much old and dead, but you're still predicting a recession. It's like one of those memes where it just never happens. People have been predicting a recession since 2022. And, we can have a debate of whether we're already in one, whether we went through one, because the GDP did decline 2 quarters in a row, and so did the earnings. But since unemployment was not high enough, we never really declared a recession in 2022 by the NBER, the National Bureau of Economic Research, did not declare a recession because unemployment did not go up. So, you can make a case for both for and against a recession, but so far, markets are liking this jobs report. Nice little reaction from both the S&P, the NASDAQ, everything pushing higher. QQQs are still down about 30 basis points. S&P is basically flat. And Nvidia, back up to almost $108. So we'll see how it trades rest of the day. And Tesla is up over 1.3%. So we're seeing a lot of momentum for a lot of individual stocks. If I come over to the extended trading for Magnificent 7 more specifically, and if you come down here, you'll notice that we got Tesla 1.5, Amazon's down 22 basis points, but we got Nvidia up over 40 basis points, Meta's up over 30, Apple is basically flat, and everything else is slightly down. AMD is the only one that is down over 30 basis points right now. So, sweet spot. We hit the sweet spot when it comes to the jobs report. It's not too hot, it's not too weak. Came in just about right, I would assume, for the jobs report. Kevin says $108. Man, if it actually closes above $108 today, I don't know. Like, I've had such a crazy option ever. I think most of the times for the last like couple years that I've been selling options, I don't think I remember any option contract. Maybe Meta, and there was one time with Google, which was very interesting. But I don't think I've had such a close call with any stock that it's come down to the final day of expiration and it's still kind of battling in and out of money on the day here. So it's about 50 cents away from being from being out of the money. And then if you account for the premium that I receive and adjust for my cost basis, it is right about at break even for the buyer. So even the buyer cannot even exercise his right to sell the shares to me because it's not going to net him any profit because it's at break even right now. So it's wild. It is absolutely wild. We'll see what happens towards the close, whether Nvidia can, shake out back above $108 or if it's going to be lower. If it's lower, then I'll most likely be selling calls because at the money calls are big premiums for Nvidia right now. I mean, these are like $2-3 a contract. If you come over to Nvidia options, and let's just come over to the calls for next week, you'll notice I'll most likely be selling for about $109, $108. We're looking at $285 to as much as $325 per contract. And if I have like 600-700 shares, that's a good $2,000, $3,000 for the next week. And then of course potential for making $1 per share in profit and cap gains. So that's what the strategy will be right now. I'll keep you guys updated, of course, on Discord. But it's actually quite interesting that it's just right about flirting with the $108 level. Okay, let's see. Northwestern Canopy recession will happen. It's time to buy IWM. So IWM, I've been buying and slowly dollar cost averaging into that. I think it still has upside. Casey says, I've predicted 10 out of the last 2 recessions. That's what happens, right? When you keep trying to predict recessions. That's why I've mentioned that be prepared for all potential scenarios. Don't predict in the markets. It's actually worse to be proactive in the markets and try to predict. I think it's better to be reactive and then of course make decisions based on what you were actually seeing in the markets at the time. iSpend says $108.10 will be the number end of day. We'll see what happens. What do you think about buying Broadcom today? What do you think about the earnings? So I think earnings were good. I think semiconductors overall are just in a really bad spot, considering that, most investors made a lot of money on semiconductors. They were very overheated. This was one particular sector that, kept on ripping higher and higher. I mean, it didn't matter. Like 2 years ago, you pick any semiconductor stock out of the blue, you were almost bound to make money on that stock. So if you come over to semis and you go over to, let's say, the monthly chart, it doesn't matter what stock it is. Doesn't matter. Let's start with Nvidia, right? Just take a look at the trend. I'm going to scroll. Intel, with the exception of Intel. Okay, I got to take it back. With the exception of Intel. So not all semiconductor stocks. Had you bought Intel, of course, you'd be regretting it right now. But Applied Materials, we got Micron, we got Lam Research, we got TSMC, we got SMH, we got onsemi, AMD, Qualcomm, ASML, Texas Instruments, Broadcom, and then Supermicro. Supermicro, of course, huge parabolic rally. It's now starting to come down. We've done several videos on that. So with the exception of Intel, you close your eyes, you take a dart, and you just put a lot of chip stocks on the dart and just buy. With the exception of Intel, you would have been higher. So I think it's okay for stocks to take a bit of a breather because of how overextended and overbought they were. And Broadcom here, I think overall earnings were pretty solid. Beat on EPS, beat on revenue, beat on guidance. and down about 6.5%. What I will be looking at though is potential puts on Broadcom. I was looking at a few support levels here, down to 119, but I think the put premiums were not that great. So I would wait for, but in my opinion, I think it's going to get bought up today. I think there's going to be a green candle for Broadcom. With very high certainty, I can say that there's potential for Broadcom getting bought up here. And if it does end up, let's say, selling off for whatever reason, there's more accelerated selling pressure because the markets might be rolling over, then I'll be looking at selling puts on Broadcom. So that's going to be the game plan for that stock. I do like Broadcom a lot. I think it's on par to getting up to $1 trillion market cap very soon. It's up to 700 billion. So definitely falls in under like the top 15 largest publicly traded companies. What is the best chip stock to buy right now? I guess, when it comes to chip stocks, when it comes to semiconductors, I feel like there's not a proper comparison that can be done because you are kind of comparing fruits, but you're comparing different fruits. So they may belong to the same type of food, but they are different, right? So because TSMC, you've got a foundry, you've got a manufacturer. ASML, you've got an equipment provider. Nvidia, AMD, you've got chip designers, right? So it's like they're all semiconductors ecosystem. They're part of the whole ecosystem, but then you've got different companies doing different things and specializing in different things. So it's kind of hard to, say that, okay, Nvidia is better than TSMC, when in fact, Nvidia may use TSMC to build their chips. So it's, the comparison may not be accurate for us to assume that, okay, one company is better than the other, which is why I do prefer like buying SMH because it's kind of like a basket of everything. If you are bullish on the semiconductor industry altogether, then I think SMH is a pretty good option that I've been dollar cost averaging into for a very long time. And when it comes to individual stocks, I think there's value in almost all of them. I love ASML. I love Advanced Micro Devices. I love Lam Research. I really like Nvidia, of course. Then Broadcom. SMCI, I really liked. I did several videos on it a couple of years ago. It was very much under the radar for a very long time. But then it got very, very very overbought and extremely overexpensive at that point, where I actually did a video to avoid this stock at all costs because it was just, very, very risky from a risk reward standpoint. It started about almost 70% from those levels. I think this is normal considering how quickly it went up. It went from like what, $40, $50, $35, $40 to $1,200. That's a 3,000% increase. Yeah, so just buy SOXX and then forget about it. Well, not necessarily forget about it. I don't think there's any investment that you can just buy and forget about it. I think we have to be careful with our choice of words because every investment, as I mentioned, carries risk, and if you don't evaluate that risk, you're just kind of cruising blindly, essentially. So a lot of people say that, oh, you can just buy and hold forever. Well, what if what's happened in the past doesn't keep happening in the future? What if things change? What if markets change? So there's some have a little bit more active participation of risk analysis, some a little bit more passive. So for example, if you're just buying and holding an S&P 500 index fund, sure, you don't have to look into it every single day or week or month. You can look into it every single quarter and every single year to see how your portfolio is doing. And if you want to rebalance or allocate a little bit more or less, depending on your strategy. Whereas individual stocks need a little bit more active involvement for you to constantly revisit the story, see how that company is doing, what they're up to, how their earnings are doing, etc. But no investment, I think, is just buy and hold and forget about it, right? Because they all carry risk, different levels of risk, and it just needs to be evaluated over a period of time. AMAT, so yes, I've done a video on applied materials as well. I do like AMAT as well. And I think I did a video on AMAT more recently also, applied materials. Coming down, very strong support, I would say 153, 154 for AMAT. So Andy, SPY versus VOO long term, I think they're pretty much both the same. I mean, you're not really getting anything other than the same performance. I mean, if you just do S&P 500 divided by VOO, you'll see pretty much it's about as close to 1 as it gets. There's no outperformance by owning one or the other. However, I mean, you could notice, you'll see actually, why is this chart going down? Let's see who can actually figure this out. What I did here is that I've essentially taken into account SPY divided by VOO. And Andy asked us a question, SPY versus VOO, which is better long term? And they're both the S&P 500. They're both tracking the S&P 500. But when I do SPY divided by VOO, why is this chart trending down? Why is it going down? And if I do the opposite, VOO divided by SPY, why is it going up? If they're both the same thing, how does that make any sense? Can anybody tell me? Can anybody tell me what might be a potential factor? I'll have to confirm that, but the first thing that came into my mind was this one particular thing. Why this might be the reason for that difference there. Yes, so Casey got it. Absolutely correct. SPY has a larger fee. So cost of the ETF is a little bit more for S&P 500. So the expense ratio is a little bit higher for SPY. It's about 3 times higher for SPY versus VOO. So VOO has a lower expense ratio of about 3 basis points, and SPY has a 9 basis point expense ratio. So you're getting a slightly better, like a very small performance adjustment for VOO versus S&P. So VOO, since it's a Vanguard product, Vanguard's kind of been known in the industry for lower fees. And so you're getting just a very, very slight outperformance on VOO. So that's something to keep in mind. But ideally, they're tracking they're both tracking the same thing. So I have VUG, which is the Vanguard Growth, which is a little bit more of a NASDAQ tracking sort of ETF, because I can shift from VUG over to VOO over time. But since I can take a little bit more risk, I can be more prone to volatility. I'm not retiring in the next several years, so that is okay. But VOO would be a better option for S&P 500 ETFs. Okay, let's see. Yeah, SPLG is SPY, just with lower expense ratio. And you can actually take a look at this on ETF.com also, but also on our MoneyVest website eventually, when we're going to be including for ETF data. But yeah, it's good to know what you're paying in fees, because fees are kind of like the hidden death of your returns. So you definitely want to pay close attention to what you're paying in terms of fees for ETFs, mutual funds, trading. There's still commissions on options, by the way. So you have to really look at what the fees are, because you might not even know that you might be paying a little bit more, and there's better options out there. You want to, you want to make your investment strategy as tax and cost efficient as possible. Very, very important, because those are things that kind of go under the radar. They fly under the radar. You're like, oh, I'm just trading, in and out. There's no problem. But then there's also taxes involved. There's disallowed losses like wash sales, and then also fees associated with that. So there's a lot of expenses and costs and taxes that need to be planned out really well. So Mike, what is a good fee? Well, it depends. Depends what are you getting out of it, right? So if what you're getting is access to a really, really exclusive fund, which you necessarily wouldn't get access to at all, and the returns and the historical performance is extremely good, then that can be justified with a higher fees or an expense ratio. But then if you are looking at S&P 500 and there's like thousands of funds out there that are tracking the S&P 500, then it doesn't make sense to invest with a fund that's charging you 1% just to track the S&P 500 when you've got an option with the Vanguard at 3 basis points, right? So that is pretty much 0.03%. So it really comes down to the rarity of the fund itself or the investment itself. What is it that you're getting access to? And do the fees justify the actual performance? Because otherwise, there's much, much better cost-efficient options out there for investing. I mean, Robinhood kind of changed the whole game. As much as we, may not like Robinhood, they were the reasons why everybody went, zero commissions or basically free free trading. So they did change the game for everyone. And oh, look, Nvidia's back over $108, up almost 1%. So that's where we are. 1.75% is high on an annual basis. Almost 2% is, again, very high. Just think about that, right? I mean, you've got inflation to beat, you've got taxes on top of your gains, and then you've got more fees to pay. Like, what are you gonna left out with, like, on a net basis? What's gonna be there for you? So definitely look for cost efficient, tax efficient strategies. Always mention to max out your 401k with your employer match, and then max out your Roth IRA, whatever the annual limits are, and then look into brokerage accounts, individual brokerage accounts, which are taxable. So, or if you don't want to worry about all of that, just move to Dubai and we'll hang out. Anyway, so coming back over to some of the comments, if you have any questions related to, the markets, related to macros, fundamentals, technicals, just let me know and we'll take a look at it. Meta is a damn money printer. Thoughts on ACGL? Nice balance sheet, steady earning growth, low P, low PEG ratio, decent EBITDA, low debt, more cash than debt. Any red flags you can spot better than us? Let's take a look at ACGL. Okay, so on a monthly time frame, looks to be a very, very solid company with a nice uptrend, consistently growing from $1.22 to well over $112. Insurance company, okay. Pretty nice consistent growth in revenues. Quarterly numbers also pretty decent. Year to date up 50%, that is incredible. And then shares outstanding have been going down. Earnings expectations are pretty flat. I mean, this is a stock that may not, grow a ton from here, considering that the last 4 years, it essentially went from $1.18 to well over, $8.45. So that's about 6 to 7 times growth in earnings. But now the forecast here is pretty flat. So keep in mind, again, historical performance is not indicative of future performance. So while the company has grown at very rapid rate in earnings, it's now started to expect it to flatline a little bit. So yes, great balance sheet, great revenue growth, great margins, good number of shares outstanding, buying back every single year. And I think they may also pay a dividend. We've got a dividend yield of, there's no dividend. Okay, so mostly a growth company, but it's expected to now start to flatline a little bit sideways. So forecast isn't the best. So Srilot says, market will sell off again later today. Don't worry. O is ripping quietly as well. Yes, the realty income. Real estate sector in general has been doing really well. It's back up to over $62. So this is something that we talked about in our update from yesterday. So if you come over to this chart, this is a very helpful chart in my opinion, because it tells you a little bit about what parts of the market are seeing strong momentum higher, technically speaking, versus which ones aren't. And you really have 4 sectors, like gold and the bond market. Then we've got XLU and XLP. And you've got XLRE, which is real estate. So really just 5 places in the markets that are up across the board, across their 5, 9, 21, 100, and 200 simple moving averages. You've also got XLY, so a little bit of discretionary that's recently picked up after the moves in Tesla and Amazon. But real estate, absolutely. It's been doing really well. We're pushing back up to $62, and the next resistance and target's going to be back up to $67 for Realty Income Corp. Thomas, that Nvidia trade you have is crazy. Your price literally won't move away from your strike. I know. It's just kind of stuck at $108. That's, it's been here the entire week. If I come over to the weekly time frame, ever since it's dropped, let's just go over to the 30-minute time frame. Like, just take a look at after the Tuesday's drop. This has been the pattern for Nvidia, like right here. Let me just fill that up. So this right here has been the pattern for Nvidia all week. This is what I've been dealing with. After the sell-off, it dropped down to 104, pushed up to 109, dropped down to 104, pushed up to 109, dropped down to 104, back up to 108. It's just been in that range. I mean, you've got a huge resistance, looks like here, and a massive support at 104. It's just been trading sideways. Back over 108. So We'll see. I mean, the thing is that I won't be able to close my contract right now. Do you have a lifetime option for your Discord and website? So Mac lifetime, no, but we do have an annual subscription, which is 16% off. So if you do decide to join for the entire year, you get 2 months for free. And then of course that will renew every year. But lifetime, I mean, my goal isn't even to get anybody for a lifetime subscription. I want you guys to be very much self-sufficient, learn, trade options, generate some nice passive income, and then of course do it for yourself with the flexibility from anywhere in the world. Like really the ideal objective for all of you, for me, is for you to enjoy your life, have the freedom, not be too fixated on the laptop or the computer every single day. Just enjoy, travel, spend time with family, take a trade once every week, 15-20 minutes that you spend, and that's it. That's generating some good income. That's really the whole idea. And of course there's capital appreciation and growth also involved there. So that's the goal. So when will you make a decision to roll or risk letting getting assignment happen? Feeling lucky, punk. I guess if Nvidia continues to sell off intraday, and then I'm seeing it at 107 or 106 or 105, drops back down to 104, then I'll most likely roll it out, or I'll make a decision later in the day. I haven't decided yet. We'll see what happens intraday. It's literally right at 108 right now, so it's gonna be hard to make a decision. Right on the money here, $108. I wonder who's on the other side of this trade, because that person and I have definitely had quite the week. I did call it a few days ago. Yes, you did. The markets are going to hold me up until Friday at 3:59. I'll do a market close live stream to give you guys an update on where we are with Nvidia, and I think that'll be fun, whether it closes above or below $108. But yeah, so not really. I mean, if it stays above $108, it's going to be out of the money. And for now, for me personally, there is not really a lot of volatility involved with Nvidia. So the thing is that I've already received the premium. So actually data is going to work in my favor, because the value of the contract now is not going to move a whole lot, because unless Nvidia moves out of a big range, I mean, if it drops another 4 or 5% intraday, so let's say that it drops down to 104, 103 intraday, that's when there is more risk to my side, because the buyer's break even is about $107.65. So if there's little to no volatility rest of the day, if it moves sideways or slightly higher, even lower, even if it's in the money, that's okay, because I've already received the entire premium. And even if I do get assigned, that's okay, because Nvidia, $108, $107, my cost basis will end up being $107 and about 65 cents. And then I'll just go ahead and sell calls. I'll sell calls at 108. So if I show you the options chain again, $108 call is $325 per contract. So that will lower my basis even further down to 104, 105 because of the premium that I'll receive. So that's going to be the plan. If I do get assigned here, it's totally fine for me, because I'll just go ahead and sell calls at $108 for next week, and that's $3.25 per contract. So that it's going to be well over what is it, 600 shares times 325 is going to end up around 1950. But these numbers will change, and the good thing is, if I get assigned and Nvidia has a relatively green day, then these premiums may even be higher. Even higher, at closer to, let's say, 350 or 375. So is that indecision having a twinge of regret getting assigned? Well, only if Nvidia drops a lot. If it drops 4 or 5% today when the market's open, then yes, then I'll end up holding like an unrealized loss on Nvidia. But that's one of the things that I mentioned is, don't sell a put on a stock that you're not comfortable holding for the long term anyway. So if Nvidia drops down to 104, 103, that's totally fine. Because, like I said, sell puts on stocks you're comfortable holding for the long term. Per contract. And if one contract is 100 shares, so you just take that, multiply it by the number of contracts. And like I said, every contract is 100 shares. Okay, Broadcom fair value 150. Let's take the assignment. Do you have the option course on options trading in your Discord? Yes, we do. So we've got the MoneyVest education tier that will give you access to the options courses, like tutorials on how to buy and sell options, and then the entire strategy, as well as my portfolio updates and the options portfolio as well, and of course the trade alerts. So everything's going to be available there. Okay, so markets right now, pre-market down about 25 basis points for QQQs. S&P's flat. Nvidia is up 70 basis points, and Tesla is up the most, 1.5%. I'm thinking about selling Tesla calls as well, but I really don't want to risk losing those shares because I was going out October 4th. I don't want to risk going into the robotaxi event of 10:10. So if you go to calls on Tesla, Stevenson, how long till the announcement? So announcements already happened. We already got the jobs report. We broke it down at 8:30 a.m. Eastern, so you can go back on the live stream and check that out. But as we were talking about Tesla here, October 4th, I already have a $300 call on, I think it's October 4th, or might be a little bit farther out. But 300 is about $1.07. And these numbers will get updated after the markets open, because Tesla right now is higher. So $1.07 is what we have. 295 is going to be $1.29. But really, if I were to sell a call on Tesla now with the other 300 shares that I have, I'd be looking at 350 or more. So Ashwini says, in an entire week, Nvidia will be like $104, $109. Yes, that's where that's where it's been for the entire week. You know, the reason why I actually am hoping for assignment is because call premiums are more than put premiums, because if I were to not get assigned, if the contract were, let's say, out of the money, and then I'm back to selling a put on Nvidia for the following week, I usually do it for a delta of 0.2. That means I'm going down on my strike further. For a delta of 0.2, we're looking at 105, 104, or even 103. Like, these are the three potential strikes I'll be selling. And then take a look at the premiums for next week here. 0.2, actually 0.2 is going to bring me down to 101 actually. I was looking at today's expiration. So next week's expiration, 0.2 delta is going to bring me down to 101 and $100. And, you know, that's about $1.32. We've got $1.12. So those are not very good in terms of premiums compared to calls. Calls are, again, $3.25, $3.50 as I showed you guys earlier. So that's why I'm kind of thinking if assignment would be a little bit better than letting this contract expire out of the money. Guess we'll see what happens at the close. So, Mike, yes, that's $3.25 per contract. So if you are selling, let's say, one contract, that's going to be $3.25 times 100, so $325. Since I'll be most likely selling 6 or 7 or 8 contracts, looking at almost $2,000 to $3,000. Do you guys hear that? Do you guys hear a baby crying outside in the corridors? Usually doesn't happen here, but okay. How's everybody doing now after the jobs report? What's happening? Markets trying to turn back into green. SMCI no love going to 350. You know, last week I was kind of looking into SMCI as well. In hindsight, SMCI should have been a much better trade from a cash to put standpoint, because it really didn't do anything all week. It actually had a pretty strong day on Tuesday. Pushed up over, 0.93%, and then of course started to roll over a little bit, and it just really stayed above $400. Congratulations on your baby, Chente. That's not my baby. I'm just asking you guys. No, that's not my baby crying. That is the baby outside in the corridor, in the hallway. I want to be very clear. Of course, if it was my baby, I would go attend to my own baby, but it's not my baby. Yes, so SMCI stayed above $400 for the most part, and this is another stock that I'll be looking at from a CSP standpoint. So Lippy PK, should I buy or hold cash? Depends a lot on, what your strategy is and what you're looking to accomplish. Oh God, now everybody's gonna start congratulating me on someone else's baby. It's not my baby. So now when it comes to buying or holding cash, I think it really depends on what your objective is. If you're, looking to invest for the long term, it is completely fine to dollar cost average every so week. Depending on, your time horizon and what is it that you want to dollar cost average into. I think ETFs are pretty much the bedrock of most portfolios. I think it's normal to have ETF like related to the S&P 500 or the NASDAQ. But then when it comes to individual stocks, I think that's more of a discussion of where the fair value is, where the support levels are, what's your conviction level. Oh God. What your conviction level is on that company. And then you can also combine that with the analysis of the MoneyVest dashboard, right? You can look at the overall MoneyVest dashboard and where we are with the volatility reading and the percentage of stocks trading above, below their moving averages. And blessings on blessings, guys. You're going to give people the wrong idea. I'm not a dad right now. Congratulations. You guys crack me up. Someone left Karthik a gift at the doorstep. But yeah, let me know if you have any other questions. Other than boy or girl. Because I don't know. I sounded like a girl outside. Christian, yes, I usually put your videos on 1.5x. Kind of strange to hear your regular speed again. Just kidding. Love your content. Thank you so much. And I do the same thing. Like when I'm consuming information, 1.5, as much as 2 times the speed every day, all day. But it's only when I'm listening to music, it's 1. It's the regular speed. I highly encourage everybody to, like, if you're consuming content, podcast, unless of course it ruins your experience. I totally get that. But if you're consuming information, podcasts, YouTube videos, whatever it is, I think 1.75 or 2 is kind of like a bare minimum. It saves you so much time, so much time. Shino, as you never know as you're traveling around the world. No, I'm always careful. What do you think about NEO? NEO's really, been a stock that has lacked execution. I think, we're starting to see a little bit of I would assume, a potential short squeeze on NEO, so that is good, back up to almost $5. But I think the fundamental picture still needs a lot of improvement, from the company when it comes to like the growth in revenues and profitability and all those other really important factors. So NEO, I would say the support level finally at 364, 365, still well within the downtrend of lower highs and lower lows for NEO. JC mom, you should get married and have a baby soon. Well, I guess within the next couple of years or so. We'll see. Still bullish on Enphase? Yes. For the long term, yes. Short term, maybe not so much, but long term, I do believe that Enphase, with interest rates coming down, the adoption for energy, I think Enphase's fundamental story is going to improve. Definitely, we've had significant amount of, declines in revenues and profitability. In fact, turned into a loss-making company for a while, but as the profitability comes back in, revenue starts growing back up, I think Enphase long term is going to be back to its prime. So you can see the earnings expectations are expected to accelerate once again and really just get back to over $6.50 by 2027. So long term, yes, I believe Enphase still has a pretty good roadmap to getting things back on track. But the short term, I think it's just a stock that's going to consolidate sideways. And, that's one of the things that I've kind of seen is that when earnings stall for some time, then companies also start, going sideways. Almost everything is kind of related to earnings. At the end of the day, like you've got bottom line profitability that really what matters for the markets, for individual stocks. If the bottom line earnings are growing, stocks are going to grow, stocks are going to do well. If bottom line earnings start flatlining a little bit, then it's going to be something like Enphase. And if they're going from losses to profits, then something like Palantir is a prime example. Who among all of you guys are going to be interested in PTIR? I think yesterday was the first trading day. I mentioned this in the video for Palantir. First trading day for PTIR, which is the Palantir 2 times leveraged ETF. If anybody's sort of feeling overly optimistic on Palantir and definitely wants to be a part of the Wall Street bets, 2 times leveraged on Palantir, trading at just under $25 and pre-market's up over 88 basis points. It's supposed to track the daily percentage move on Palantir. We had over 51,000 shares exchanging hands on Palantir yesterday. It's kind of very similar to TSLL, which is Tesla's 2x bull ETF. There seems to be a very much growing demand for ETFs like these that are constructed right on the basis of having or giving investors exposure to more leverage, to ETFs that move twice as much, 3 times as much as the daily percentage change for individual stocks. Seems to be. Okay, hold on one second. I'm getting a call. Just 1 second. My girlfriend's calling me. So yeah, just give me 1 second here. Yeah, sorry about that. Here we go. Yeah, the fees are really high on this ETF. So definitely be careful because, this is something that you can already do with your own funds if you are interested in these individual stocks. But definitely, very, very high in terms of... God, you guys... Baby mama calling. Do you want to extend your car warranty? No, it's not that. She's at the door with the baby. You guys are brutal. Let's get back to Nvidia, shall we? $108.34, 35 cents. That's where we are. Just consolidating sideways for a really long time. Don't call when I'm working. So how many people here believe Nvidia is going to be above 108 by the time it closes today? So by the way, we got over 1,000 polls on the day for this unemployment, almost 1,100. So I'm going to end this poll now. And that's a lot of people. That is a lot of votes. So that is incredible. And the mysterious girlfriend in India heard about the baby and had questions. I think that's what it was. I think that's really what it was. Anyway, so let's talk about Nvidia today by close. Above $108 or below 108. Let's see. Let's see if my shares are coming to me, if Nvidia is getting assigned to me or not. Am I going to be buying Nvidia today after the bell, or the buyer is going to be very frustrated after the markets close? Google Vault, I would wait a little bit longer. I think it's still got a little bit more potential downside. I wouldn't be surprised if it does. So I think that's why I'm kind of waiting to kind of build out a bigger position. I've been buying Google a little bit, but I will buy a lot more if it ends up selling off further. So she should be watching. Go change the diaper now. Don't make her call you. God, you guys, that baby's gone, long gone. It was way earlier. It's about what, half an hour ago. And of course I would help her. Okay, so we got 64%. It's actually quite funny because I did a very similar poll before the numbers came out when Nvidia was down 2% pre-market. And I did a very similar poll in our Discord asking people whether Nvidia you think is going to close above or below 108. And I think over 70% of investors or members in our Discord said below $108. And that's what I think recency bias does to you. Mike, does she invest? No, I don't think she does. So Tesla poll, we can do a Tesla poll as well. What stocks is she long on? She's long on me. She's bullish on me. That's what she's bullish on. So, yeah. But anyway, pretty soon he'll be off to college. Oh, God. I feel like this is just going to turn into a channel joke where you're all going to say that Karthik is a father now. I think it'll close right at 108. If it closes right on $108, I think Alistair says I'm bullish on you, Caddy. Thank you. I appreciate that. Tesla 150 today. Okay. 117.50 resistance. Caddy's baby will have his own YouTube channel teaching us options and more. Calls on you. Yes, yes. Tesla 250. No, but we got 58%. We got pretty split vote. Pretty split vote here. Anyway, so market's going to open in about 10 minutes here, folks. We are ready for the open. And how are we feeling for the day? Markets are going to have a flat open right now. We got, S&P 500, QQQ is about as flat as it gets right for the open. Sold my swing trade on Tesla at 233. Okay, folks, let's get back on track here. Let's get back to the main topic of conversation, which is the markets, and let's keep. I'll keep my personal life for Instagram. I think that's where I'll post. If you guys want to connect with me there, definitely do. CastWRP is going to be my account, and I'll be posting, a lot of stories, a lot of posts. If you want to connect with me there, and I'll be posting a lot of my personal stuff over there. If you want to connect with me, and I'm always, interested in learning more about you and your life, and can definitely connect with me there. Nvidia again retest for the 109. Yes, I think it is possible. I think we've just been trading inside this sort of rectangle over here. So 109, $110 is a possibility for the day. And then of course support level has been around $104. Swingers channel. What does that mean? What does that mean, swingers channel? But let us know what you're expecting for the markets today. Type in 1 if you're expecting the markets to go higher. 2 if you're expecting the markets to drop. So 1 for rip, 2 for dip. Let us know. Can we look at the yield inversion? Yes. Let's go over to that. We are now well in the positive territory, up about 20, about 2 basis points, 3 basis points, up about 280% on the day. So the uninversion, as we already know, when that happens, there's probability for a recession, much higher. But with today's jobs report, I mean, that was Very, very strong. Jobs report. Go check it up. Who are swingers? Yeah, I don't know what that is. So we got a lot of ones. A lot of ones here. One first and then two later. Okay. Interesting. We are seeing some momentum to the upside. Nvidia is almost back up to 109 now. Brother, you deserve a like. One thing you never spoke about InMode anymore. So, Alex, we have spoken about InMode quite a few times on the channel before. It's a company that's, as we already know, based out of Israel. There's a lot of geopolitical tensions. Fiverr, InMode, a lot of these companies that are based out of Israel, kind of in that war zone right now, unfortunately. But InMode is one of those companies that has, incredible amounts of cash with little to no debt. Very, very good company in terms of its fundamentals. But it's just the lack of expectations for revenue and earnings growth that's kind of killing the business right now. You can see the earnings expectations for 2024, 2025, 2026, kind of like a modest increase after a decline this year. So while this is a company that has very good fundamentals, the growth is really deteriorating for the business right now. So, for those reasons, I think InMode's performance has been a little bit more lackluster. Yeah, I don't know what swingers mean. Would Nvidia test 104 at support? Well, on a 30-minute time frame, yes, $104 is that support. But if you were to come over to a longer time frame, we've got a support sitting roughly around $96, $97. By the way, Professor Demodrin did a video earlier today on Nvidia. As we already know, he's the Dean of Valuation at NYU. We've had him on the channel before. We've interviewed him. Got a lot of great insight from his feedback and his analysis. As you already know, that my fair value on Nvidia is sitting roughly, I think, in the mid 70s, low 70s to mid 70s. His fair value is sitting at $86 on Nvidia. $86, which represents about a 24-25% overvaluation on Nvidia. He posted that video earlier I think today or yesterday. The last time I checked, it was like 9 hours ago, so fairly fresh analysis, and a 30-minute video going over Nvidia, updating his model and his value, his fair value, intrinsic value for Nvidia sits at $86 and some change. So rounding up, it was closer to $87, which represents, like I said, about 24-25% pullback for Nvidia. So I think Nvidia is kind of in a spot where it makes for a very good sort of options strategy. I've done this for Tesla for quite some time. I've been running the wheel. I've been selling calls, selling puts, selling calls, selling puts, and that's been pretty good premiums for Tesla. And I think now really interested in doing that for Nvidia because of the premiums that Nvidia has. It's got very, very good premiums. Like I showed you guys, $3, $4 per contract is what you can generate. And if it does end up, let's say, dropping down to $80 or $90, you can kind of be confident that you're buying it at fair value. You're buying it pretty close to fair value for what it's truly worth. Right now, you can make a case that, yes, it's still overvalued by over 20%. And based on my expectations, mine are a little bit even more strict because I also apply a 10% margin of safety. So if I remove for that 10% margin of safety, by the way, you can actually do this on our MoneyVest platform. We've also got a new case analysis feature where if you come over here under Analyzer, you can also look at case analysis and then figure out, okay, what's the fair value? What's the percentage difference, the compounded annual growth rate, all those different things. So if you come over to, let's say, net income, and we look at the next 5 years, margins, kind of staying the same. Compounded annual growth rate, we can sort of come down 30, let's say 40. And even that, I feel, is a little bit higher, 20, 30, and let's do 40. P multiple certainly needs to come down. Let's do 25. And then we've got, let's say, 45, or let's do 40 and then 45. We can do 30 multiple here. Shares outstanding looks good. 14, 12, 10% discount rate looks good. Margin of safety 15, 10, 5. We can even do like 12% here for bull case. And if you scroll down, the fair value, look at that. We've got $32 on the bear case, $92 on the base case. which represents about a 14% potential downside and a compounded annual growth rate of 14% over the long term. And you can play around with these numbers and kind of figure out, okay, what's the price target and the fair value, because it also gives you the future price target for the stock, which comes out at about $180 based on this analysis, and bull case comes in at 358, which again is a very, very high number. So you can use this, right? This is why we've built this calculator. We've got discounted earnings model, discounted cash flow model, case analysis. You can pretty much look at revenue, EBITDA, operating cash flow. You can analyze for whatever it is that you want. And what it's going to do is it's going to calculate the fair value for you. You can also do a price to sales multiple. How much do you think the revenue is going to grow over the long term for Nvidia? And that's what this fair value is going to be based off of, right? Price to sales. And the multiple of sales, because multiple of sales right now is very high for Nvidia. If you come over to where it is trading at the moment, come back here, you've got a price to sales multiple of 27, which is incredibly high for any company. So you can do the analysis, you can figure it out for yourself, see what works best for you, and then again, invest based on that analysis. So everyone, thank you so much for joining. Market's going to open in about a minute here. Let's see where we are with the subscriber count at 82,000. Nope, 83,000. We hit that number. So thank you so much for yet another milestone. How many months do you think it's going to take us to get to 100,000? We got 17,000 more people that we need in order to get to that level. How many months do you think it's going to take us? Bob, a buy right on Nvidia. I think that's a good potential opportunity there because of the call premiums that are so good. And if Nvidia has any type of sideways momentum or even lower, I think, or even higher, that's fine. I think that's going to represent pretty good opportunity to capitalize on. But thank you so much everyone for 83,000 subscribers. Really appreciate you all, and we're expecting for that next big milestone for 100,000. We're gonna push as a community. We're gonna push to get to that level very soon. Okay, markets are open. You got QQQs flat, S&P's flat, Tesla is up about 90 basis points, and Nvidia is just a little bit under $108 a share right now. The worse the market, the faster you get there. That is true, actually. That's actually quite crazy because every time the volatility spikes, views spike at the same time. It's kind of crazy. Grad says it should be 250K by the end of this year, man. I mean, I don't know. It's been pretty tough to grow on YouTube. So 2 months, 100K. I'm going to need a lot of support from you guys because at the end of the day, it is a community, right? It is not just me, it's all of you and all of our hard work together that's helped us get us to this level. So I'm going to definitely need a lot of word of mouth, recommendations, a lot of sharing, a lot of getting more people involved, friends, family, everybody. Of course, if you enjoy the content and find it valuable. And I think then we can definitely do it. Anyway, so market's open now. I'll keep you guys updated. I'll most likely go live during market close to see where we are with Nvidia stock because that's going to be the big stock that I'll be watching on the day. Just a little bit over $107 as volatility comes in right at the open. VIX is getting crushed right now. Yeah, 4.3% lower. 19 is where we are on the volatility. And as a result, markets are seeing some relief. 24 basis points higher. QQQs are still flat. And Tesla is taking a bit of a dump. $230 back down to those levels here. Okay, everyone. Thank you so much for joining. Really appreciate you all. Make sure that you drop a like and subscribe to the channel. Really appreciate it. Next week, we've got inflation. So next Wednesday, CPI numbers. I will be live to cover that as well. And subscribe to the channel. Link's going to be down below if you want to join our Discord, our Patreon, get access to the options portfolio, all the trade alerts, engage with thousands of traders, investors worldwide, and also access to all the other members-only videos and other investing alerts as well. So link's going to be down below. We'd love to have you on board. And happy investing. I'll see you all during market close. I'll see if I can come online once again during market close to cover the markets and pretty much wrap up the week. So thank you so much. Happy investing.